Well, good afternoon, everyone. Welcome to our webcast on selecting an option strategy. I'm Connie Hill, product manager and educational coach here at Schwab. Happy to have you on board. There's been a lot going on in the market since we were last together, hasn't there? And for some traders, it might be a little confusing. And so I have a question for you I want you to be thinking about, and we'll be talking about today, and that is, what trend are you following? Are you following short-term trends? Are you following intermediate trends? Are you more of a long-term trend person? And so you're just kind of treating all the activity we've had here recently just kind of as noise. All right. So, and if you don't mind typing into the chat what you happen to be, I'm going to say following the closest or have top of mind. Okay. We'll talk about that here today. Now, I hope that you are following us on X. It's a great opportunity for you to be able to connect with your favorite instructors. And so I'm Connie Hill, CS. Cameron May, who's helping us out in the chat here today. Thank you, Cameron. He is Cameron May, CS. All right, we'll post educational content out there, things that we might see in the market that we think are interesting, that we think you might find interesting as well. Then we try to post about that. Now, let's go ahead and go through some disclosures, and then we'll lay out the agenda we're going to follow here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for informational and educational purposes only. Don't consider it a recommendation. We'll be using a lot of technical analysis today, but Schwab does not recommend only the use of technical analysis as your sole means of research. We will be using the Paper Money software application. That's what you download to your computer. It's the most robust version of Thinkorswim. I think it's a great platform for you to kind of try out your theories as you're learning different strategies, maybe applying different rules to them. Do it out on that Paper Money side until you get comfortable with it, all right, before you transition over to your live account. Past performance of any security or strategy does not guarantee future results or success. We will be talking a little bit about stop orders today. There's no guarantee that execution of a stop order will be at or near the stop price. That simply is the trigger price. Typically, that'll release a market order, which we're just saying, hey, fill at the next available price that you can. So always know that price is never guaranteed. Now, I'm going to give a quick nudge to you. If you can get to any of these workshops or market drive events, you will be a happy camper about it. Okay, so we've got Scottsdale coming up in, not this weekend, but the following. We've got Chicago, which is an advanced options workshop. We don't do very many of those. And so if you are feeling like you want to kind of get into some more advanced strategies, that's a great place to be able to go. And then, of course, we're going to have Detroit, April 11th and 12th. Okay, so if you need a little nudge to get there, this is your little nudge. If you're at all interested, go ahead and sign up because they do close down early. I think the Chicago one might be closing down like really soon if it hasn't already. Okay, I haven't received word that it's closed, but it could be if you go out there. So just go ahead and do it quickly. All right, just going to look at your answers here about, what kind of trend are you personally, what are you following? And Greg says that there's a trend. Yeah, we're going to talk about that, Greg. Let's see who else. Cynthia says, I'm looking at the closest now short for learning. So I think you're saying there, Cynthia, more of a short-term trend. Great. Yeah, we could be looking at multiple time frames here for sure. Cynthia has a question here. When you attend a person workshop and bring your laptop, are there extra monitors? You're going to Scottsdale. Well, Cynthia, we're going to be happy to see you in Scottsdale. You're going to be happy that you're there. There really is kind of room for you to be able to plug in your laptop and use that screen. Most people are working within kind of confines of just, kind of like a one-seat thing. I don't know how big your extra monitor might be that you might want to be bringing. So just kind of keep that in mind that it might not be easy to facilitate, but I don't know the size of your monitor. Okay, so just kind of keep that in mind. Well, we always want to look at market conditions, and boy, there's been a lot happen in the last week since we've had some time together. So we're going to just kind of take a quick look at things, see how the markets ended up today. We're going to talk about what option strategies people might consider based on the market conditions. And usually it's not just one strategy. Okay, it could be a number of strategies. Then we're going to look at a lot of examples here today, also following up on some previous trades that I like to go back and say, okay, what's happened with this trade since we last were working with it? So let's head out to our Thinkorswim. And I've got the SPX pulled up here today. Now, and I'm going to kind of zoom in. I know the chart is a little bit busy, but I didn't want to erase anything. Before I zoom in though, okay, let me tell you what the moving averages are. So the one that's kind of wiggling around the most here is a 10-day exponential moving average. No, actually it's simple. It's 10-day simple moving average. The red one is a 30-day moving average. This kind of, I'm going to call it a light gray color, is a 100-day moving average. And then this light blue line down here, that's a 200-day moving average. And so interestingly enough, today, what happened? The SPX, this has been its fourth consecutive significantly down day, came right to the 100, actually broke through it. But at the end of the day, it looks like it's closed just barely above it. All right, which is very interesting. It had broken through kind of a diagonal support area here earlier today. If somebody had a line kind of drawn through that section of candles there. And really, we've got these 4 down days after reaching an all-time high. Okay, and sometimes we may see things taking place. We may see profit taking after a market or a stock hits a new high. We also have a lot of news that's filtering in. And some of it, I think, is scaring the markets a little bit. And so we're starting to see some transition into maybe, I'm going to, in air quotes here, safer places that are maybe more defensive in the market. Okay, we're starting to see that transition. In any case, those of you that pay attention to the candles, what kind of a candle have we got here today on the SPX? Hopefully your brain immediately says, that's a hammer candle, Connie. Yeah, that is a hammer candle. And a hammer candle, many times, not always, right? Nothing's ever guaranteed in markets, but many times is an indication of a reversal likely to be happen the next trading day. Now, really, the bears had it pushed clear down here, but towards the end of the day and where we closed, the bulls came pushing back up, a lot of buying pressure to cause the price to go back up. And so it's possible tomorrow we may see some bullishness. Now, like I said, it's never guaranteed. And sometimes we have news happen overnight. We have a lot of chatter about new policies that are being put in place by the new, I'm going to say, president and his entourage, right? New policies going into place. A lot of talk about, okay, maybe the tariffs really are going to start next week. Okay, I think that is causing some uncertainty in the market. Now, let's look at the NDX here real quick, and then we're going to look at the VIX. NDX had kind of a similar type thing going on. Again, I've zoomed in here, where it hit an all-time high here on the 19th, which was last Wednesday, and then the 4 consecutive days of pulling back. Now, the NASDAQ doesn't have quite as bullish of a candle as the SPX chart did. Right, the SPX, this just was a little kind of a smaller body. And this one, I would say the body is actually longer than the shadow to the downside. So it does not have a hammer candle, but there is a little bit of relief off the lows. Now, when we see things like this, we might say, maybe any order that we might consider putting in, we're going to be conditional about it. Meaning we want to see something happen the way we think the direction of a stock might be going in order to get in on the trade because of that uncertainty in the marketplace. And it's not a bad idea to do at any time, right? To put in a conditional order. So let's look at the VIX here now. Now on our VIX, I'm going to kind of pull back here a little bit. Let's give ourselves a little bit of room here. On the VIX, we did kind of get some recent spikes here, right? spiked up here close to 22, 21 and some change, was kind of creeping into territory where we had highs here and highs here. But at the end of the day, what happened with it? Man, it started to pull back. Okay, so that fear in the marketplace is subsiding a little bit. It has a reversal candle as well. It looks like it's kind of what we'd call a shooting star. And a shooting star is basically one, maybe gaps up from the previous day's candle and runs clear up here. And then it begins to pull back and pull back. Okay, kind of like the imagery of a star shooting in the sky, right? And that is a strong potential reversal candle as well. So if we do see the VIX start to drop a little, maybe there will be enough momentum for the markets to do some sort of bullish activity, but we just really don't know. Oh, looks like we have a survey out in the chat. Now, those of you that have been with us know that from time to time, we'll do a survey with you, right, out in our classes. And so what is helpful is if you'll go and click on that link right now, you don't need to fill the survey out yet. But if you click on it, it can just kind of sit in the background. And when it's time for you to go or we wrap up the class, then maybe at that time, fill out the survey. It's super easy. 2 questions that are just fill in the radio button on a scale of 1 to 10. And then there's a couple of places you can respond to the question. And I also will encourage you to use that as some space to communicate something with me. For example, maybe something you're struggling with, maybe a particular type of trade you want to explore. I like to incorporate those types of things into our discussions. Okay, so feel free to use it for that purpose as well. Okay, answering that survey. And I will say, you know, as coaches, we really appreciate the time you take to fill those out for it. It really helps us out quite a bit. I'll give you a reminder before we wrap up here, and Cameron will post that again for us as well. He's also, I noticed, pinned it to the top of the chat, so if you're not really seeing it in the body, if it gets a little bit lost, you can go up to that pinned message at the very top of the chat. You can see it's kind of a dark blue, not exactly an oval, but kind of a dark blue space that has the survey in it. All right. So with this, there's some things that might happen tomorrow. There's some things that might not. Now, what I'd like to do initially here is go back. Let's consult our different strategies, okay? And with our different strategies, we have a number that we typically will focus on, right? But it doesn't mean that even if we focus on a particular strategy, it doesn't mean that you shouldn't do a different strategy or that it's not appropriate, okay? You may have 2 strategies in your arsenal that you feel good with, okay? So you might be likely to maybe work with one of those strategies, even though maybe you were like, man, I'd really kind of rather do a neutral strategy, maybe, okay? But it isn't something you really prepared for at this point, okay? So we've got our bullish strategies, our bearish strategies, and these vary between, say, very bullish and bullish to neutral. Okay, let's say like a long call or a synthetic stock, yeah, it's going to be very bullish. Typically, people might do that kind of a trade in a very bullish environment versus, say, for example, a short put vertical is bullish to neutral, okay? And so it will vary on the scale of how aggressive that might happen to be. Okay, same thing on the bearish strategies. A long put or a short synthetic stock, those would be very directional, right? Those would be, man, we think this thing is falling off the cliff type of thing. Versus, say, if we did a short call vertical, it would fall kind of in the range of bearish to neutral, meaning not as bearish as a long put or that short synthetic stock short, okay? Not quite as bearish of those as those. And so keep that in mind as you're looking at strategies. Now, let's take a look here at a couple of opportunities that I'm seeing. Now, given what the market's doing, given what volatility has done in the last couple of days, kind of creeping up, and then maybe having a little bit of a pullback here today. Let's jump back over there. I would say volatility still is not in our really low levels. When the VIX is down here at these lower levels, say 14.5, 15 or lower, then typically we don't see priciness in the options. When we do have higher implied volatility, the options are more pricey, they're more juicy. And so that actually can be a little bit be enticing to a selling strategy of some sort, meaning, if you wanted to go long something, maybe you do a long haul vertical or a short put vertical. Okay, you do some sort of strategy where you're selling some of the premium because of that. Now, you don't have to, right? You don't have to, but I would want you to recognize that the premiums are maybe a little bit higher now because of where implied volatility is versus what the premium might be if they're down, VIX is down here at 14.5, 15. All right. So let's take a look at something here. And we're going to take a look at Palantir. Now, Palantir, man, it has been on just a huge run, right? Year to date, now with this huge pullback, is now only about 13%. It was significantly higher than that. But it is down about 29% from this peak price here, okay? Now, some people might look at this and go, well, you sure don't have an entry signal, right? Because it's really pulled back. Now, I wanted to mention to you about the trend and what trend you are following. And if you are following, say, shorter time frames, then that might be indicative that maybe you're watching for some swing trades or doing some swing trades. So you're really paying really close attention to where those pullbacks are and say maybe bounces or breakouts to the bullish side or breakdowns on the bearish side. Okay, but you have an idea in mind that you're like, this is not a long-term trend that I'm trying to trade with this particular position. And so your focus might be a little bit different. So, Ted may have one outlook for what he's working with by and large, and it could be totally different from Ricebird or Randy, right? They may have maybe a longer point of view where maybe they are more concerned about this 100-day moving average and 200-day moving average as opposed to a 10 and a 30. Okay, hopefully that makes sense to you. So here we'd say short-term trend, definitely bearish. We see that 10-day going down. It was trying to make contact. It looks here like earlier in the day, kind of slipped below the 30-period moving average. And, it may not have much support until about where? Let's see here. Let's draw this line in here. Kind of get the tops of those candles, maybe about 84 or so. Now, I could also see somebody looking at this and saying, well, it's not really a hammer candle today, but it's kind of hammer-ish in that it didn't close on its lows. It closed a little way up, okay? So what we're going to do on every order we do today is we're going to put a conditional order on it, which basically means tomorrow, stock, you need to go to at least this price or don't get me into the trade, okay? We're actually going to do a bearish trade on this stock with the idea that it's going to be a conditional order. And the conditional order, let's see here. We would really maybe want to see it maybe go below this 84 area, which means we'd put it in as a market order. We really don't know exactly what we would be getting paid for it. Okay, but we're going to make that. So 84.09 is what I've got here. What's the low today? Low was 85.25. So yeah, let's see if it goes below 84 even. We'll just use an even number there. Let's go ahead and plug that in here. So we put that in our conditional order. All right. Let's take a look at the trade tab. Now, some of you may say, I'd rather go bullish here. That would be obviously your prerogative, right? I would also encourage you using a conditional order if you were trying to go bullish. Every order we're going to do today, we're going to put in a conditional order. So let's see here if this kind of makes sense based on where the price of the stock ended here today. I was eyeing earlier the 80 or 96, 96, 98 call spread. Okay, let's just pull it up here. And let's just say sell vertical. We'll spread it out by an extra buck. Change this to 98. And market's closed right now, right? So the price shouldn't be shifting around on us too much, although, well, the price of the stock does has a little 24 there. It's trading 24 hours a day, which is nice. We've got all those stocks to look at. But in this case, let's see if it would make sense, okay? Let's go ahead and just run some math. Sometimes people will say, well, I would like to make sure I get a certain premium or percentage return or intended return. Some of you might say, well, I feel a little bit more comfortable doing a lower delta. That certainly could be. This one's what, 36 right now? If we have a conditional order where we need the stock to drop maybe about another $1 or so, the premium might not be quite as good as what we're seeing right here. Okay, so if we were to take our max theoretical gain of 58, divide that by the max theoretical loss, which is going to be $2 minus 58. Let's just do the whole math here. Oh, that didn't work very good. Let's go 2 minus 0.58. That's going to give us $1.42. So $1.42 is our theoretical max loss. Would be risking 142 to make 58. What kind of a return does that give us? We'll go 1.58 divided by 1.42. That's about 40%. So knowing that in order to meet our conditional order, price is going to have to drop, okay? So likely we're not going to be shooting at a 40% return. It's probably going to fall somewhere more in the 30s somewhere, okay? But let's go ahead, let's set it up. I'm liking the open interest that we're seeing here, open interest and volume. We're going to use the options here that are the monthly expirations for March. That kind of falls in a time frame that many traders like to use for spread strategies, okay? That they want to work with maybe 20 to 40 days worth of time. So it's kind of at the lower end of that range, but certainly well within the range. All right. Now, let's see. Kevin says to Randy, so let's see what Randy was asking here real quick. Okay, looks like you guys are just having some conversation, so I'll leave you to the conversation. All right, let's do it. Here, if we're going to risk $1.42, which is $142, and we don't want to risk more than $1,500 on any trade that we put in, we're going to take $1,500. We're going to divide that by 142. That says, okay, you could do 10 contracts. We wouldn't want to do more than 10 contracts. So if you, and your position sizing probably is totally different than what we're using in the class. So make sure you follow that methodology as far as, okay, what's the max loss that I'm comfortable with in my account of my size. All right. And here we're doing 1% of that account. We're saying we have a $150,000 portfolio. We're just going to risk 1% per trade. All right. So let's do our 10 contracts. And we're going to make it conditional. All right. So what we're going to do here, we're actually going to change this to a market order. Sometimes that feels a little uncomfortable. You could also watch it tomorrow. You could set an alert and have it tell you when it got to our 84 price or lower, okay? But we're just going to kind of build this in here. So we are going to say, basically, don't fill us on the order until this condition is met. That we want the mark price to be greater than or equal to, we're just going to go 84 even. Now, let me make sure I did that the right direction here. We want to make sure it goes to that price or lower. Maybe we need to scroll down a little bit more. There we go. The security is greater or equal to, so we've got to switch our sign there. Let's go back to the original one here. So it's less than or equal to 84, then trigger the order. Now, when you have something that has a lot of options out there trading, a lot of liquidity, you're more likely to get filled at I'm going to, in air quotes, say a better price or a price that you're comfortable with, but it never is guaranteed, right? So we're going to see how this turns out. Again, if the price of the stock doesn't drop to 84, we're not getting in the trade. We're going to pass it by. In fact, if somebody were watching it tomorrow and say PLTR had a big reversal, they might choose to do a bullish trade with it, okay? But that's what we're going to do, again, using those conditional orders. And let's see, this was saying here, just kind of warning us there could be potentially wide markets or liquidity risk at the time of activation, which is kind of a message that always comes up to let you know that the price isn't guaranteed. It's going to be a function of the market and liquidity. So we're going to send that in. Now, I want to take a look at another stock here that kind of falls in the staples range happening on Starbucks. They're out of their earnings, so we're not having to worry about that. Had a nice earnings, right? The market liked what they had to say, and they've continued to run since then. Now, it's looking like maybe it's hitting a little resistance here about 113. Now, earlier today, when I was looking at this stock, it was closer to the top of its range today. And so on a market that's maybe a little bit more on the bearish side, but bouncing off its lows, this pulled back maybe a little bit more than what we might like. And so again, we're going to say it's nice to get in if this has some continuation tomorrow and turns out to be more of a breakout type scenario, then we're interested in being in the trade, knowing that Starbucks is kind of a staple, right? I don't know if there's very many of you willing to give up your Starbucks, okay? I'm not willing to give up my Diet Dr. Pepper with cherry in it because that's my favorite, right? And there's just certain things you want to keep purchasing, right? Those are what staples are. So let's kind of see what we've got as far as opportunities. Now, we're going to stick again with these monthly options, and I want you to notice there are some strike prices that have a lot of open interest, okay, like this 105, this 110. I mean, there is a lot of activity out there. And then the ones that are in these single strike increments, there's not as much open interest there, although I imagine as time continues to roll forward, they will start having more activity. They're just fairly new. All right, so looking here, let's see if this still makes sense, the strikes that I was looking at here. I was looking at a 112, 110. Looking here at maybe about close to 100 open interest contracts, which is not a ton. Getting in here on the 110 strike. Let's see what kind of, let's change that over. Sometimes my mouse slips there. All right. So I wanted to do 112, and let's change our 111 to 110 here. All right. That's about a 53-cent credit. So we would be looking for a gain, max gain of $53 per contract, and a max loss of $2 minus 53 or $1.47 for our max potential loss. So again, let's go run numbers. Let's see if there's a decent enough return, especially if we put a conditional order on it that says, hey, stock, you need to get past today's high. Okay, so let's just see how that might look. So if we have 53 divided by 1.47, it's about a 36% return. Okay, probably wouldn't get filled quite that high if we put a conditional order on it. Okay, we're going to go ahead. We're going to do 3 contracts here. One thing I did want to add is that after we are filled on these orders, if we are tomorrow, then I'll go back in and I'll put in some exit orders for if we get a big chunk of our credit, right? If we get 70 or 75% of our credit here, we're going to put in an order to get us out of the trade. In fact, we'll look at some of the trades that just kind of finished up, and you'll see how useful that is because it just can hurry and execute that for you. Okay. So we're going to do 3 contracts here. We will make that conditional. Let's change this to a market. Let's put in the conditions. And before we go to that screen, let me just check and see. Looks like the high was 115.24. So let's say we want it to maybe go beyond 115.24, which would be what, maybe about 70 cents or so from where the price closed in the market today. Okay, so we're going to go with 115.24. And again, if this is a little bit higher, those puts aren't going to be worth quite as much, which is why we're expecting maybe not having a 36% return. Maybe it'll be in the neighborhood of 30 or 32 or 28 or something like that. Sure. All right. So let's go put our conditional order in. And I'm going to kind of move this up here. So we are going to say, all right, if Starbucks gets greater than or equal to 115.24, then get us into the trade. If the stock doesn't go there, if it goes down, it's going to bypass this and would probably go out and just cancel it, right? Because now it's not really doing what we thought it would do. We might maybe adjust the entry depending on what we see in the next day, if it still looks like you like it for a good entry, okay? But if we don't get filled, we're not going to feel bad. We're going to feel happy that we didn't get filled on it. And we want it to be greater than or equal to 115.24, which would be basically hitting today's high and going from there. All right. So we are going to send that off, and I should put the other one in our option strategies bucket, like I did with this one. Now, I have a quick, Antonia, you don't need to like Starbucks coffee. No problem. Okay. Now, I want to just kind of check in with you guys and make sure that you are subscribed to our Trader Talks channel. When you are, it just makes it so much easier to find our content. All right, let's go over to, got an open window out there. I want to show you what it looks like. Oh, that's the wrong one. Let's go over here and let's go to our Trader Talks page. All right. And it makes it really easy for you to go out, see what's coming up next. All right. See what happened fairly recently. If you want, we're here in selecting an option strategy. Next class is going to be tomorrow morning, right at the opening bell. If you wanted a little reminder when that class starts, you can give yourself a little reminder. And then we'll also put out here some of the most useful or maybe used in this category, the most popular webcasts, or suppose you're trying to go back and maybe see some of the previous trades that we've been doing in this class. All you need to do is pull up the playlist and go select it, and then you can see the list of all the classes that have been taught that we've had over the last little bit. Okay, so I love this functionality in YouTube, being able to subscribe to a channel, because I do subscribe to a lot of things, and it just makes it really easy for me to go find the content that I'm looking for. So if you haven't already clicked that little blue logo that looks like YouTube in the bottom right corner, go ahead and do that now. If you've already done it, don't do it again, because it will unsubscribe you, and we don't want to do that. Okay, just if you haven't done it before. All right. Oh, somebody likes the Dutch Brothers instead. That's fine. You could like it. There's no problem there. All right, next up. Let's take a look at another potentially bullish trade. And it's going to be potentially bullish depending on what it does tomorrow. Okay, look at AppLovin. Not Advanced Auto Parts, AppLovin. There we go. Get the numbers in the right order, the letters in the right order. This is a stock that has just been really, really bullish. And even after this big pullback, after hitting that 525, it's still up year to date, 12.43%. Obviously, it was up higher significantly. Now, it looks to me like it's kind of hanging around support. Maybe earlier in the day, somebody might have said if they were looking at the candle down here, they might have been, maybe this is breaking support. But it did rally off its lows. And again, we would only do a conditional order here if the price of the stock is higher. And what we're going to do here, you could pick whatever number you feel comfortable with. You know, if somebody wanted to say higher than what its high was today of 406.70, That's a possibility. That would make the stock have to move about $7. Is that right? 406, and it's at 377. No, it's going to be more than that, quite a few more. Some people might say, well, it kind of presents tomorrow as maybe like a piercing line. Piercing line is another candle that basically is bullish and goes well within the body of this bearish candle here. And that can be an indicator of momentum reversal. Okay, so we're going to not necessarily make it go higher than today's high, but maybe a number we'd feel comfortable with, that maybe it was forming that piercing line and an indicator that it was ready to reverse. So here, let's go. Let's see what that number is. It looks like it is 390. It was like 396 and some change. Let's just go 396. We don't want it to execute the order unless that happens. Okay, and that's a pretty decent move from where it closed here tonight, right? That's almost $20. So we want to take that into consideration when we are looking at our trade. Now, in terms of the trend, let's go back to that idea. If somebody were following the short-term trend, right, get the idea that, okay, yeah, definitely has pulled back with these 5 or 6 days of pulling back in the market, in the stock. But its intermediate trade, that 30-day moving average, it's still going bullish, and it looks like the stock is maybe finding some support here around that 386, as well as the 30-day moving average. And it's not even close to its 100-day moving average down here, which maybe somebody looking a little bit longer term might be more concerned with and might make decisions based on something that's longer term. It would also indicate probably that maybe the time frame for the trade they have, whether it's a stock or whether it's an option trade, might be a little bit longer term, that for them, maybe this representation is noise in the market because it isn't even close to that 100-day. Does that make sense to you? Hopefully it does. So I would say here, the trend that we're looking at both that short-term trend getting a little bit weak, but looking to see if it does use this as support and kind of bounce off of it. All right, so we're going to use 396. So as we come over here, and there could be someone who maybe this is enough an open interest for in the weeklies. It's not as comfortable as what I'd like. I really like to see lots and lots of open interest. Means that your bid-ask spread is typically a little bit more narrow. Let's let you see kind of what that's looking like. So our open interest here, we've got lots of activity in the open interest as well as the volume today. Remember, tomorrow volume starts all over. And then note here that we might go a little bit aggressive with strike price we sell, knowing that the price of the stock, we want it to go up. And therefore, the puts are not going to be as valuable then as maybe what they're showing right now. So what we're looking for here, let's see if this still makes sense. I was going to do a 360, 350. So let's do a sell vertical. And we would be risking essentially what? 445. That's what our max theoretical loss would be. And looking to bring in a credit that really is quite, I'm going to say it's really juicy right now. But the price of the stock is going to be significantly different, even though, let's see, what's the delta right now? The delta is at a 37 delta. If it were to make that move, we would expect a drop in the delta. And we would expect a drop in these prices. So not getting, a huge credit on this side. That makes sense? It's going to should be significantly less if it meets our entry conditions, which is why we're saying, all right, we'll go a little bit higher on the delta. And if you were more comfortable selling at 350 or 340, there's a lot of implied volatility in these options. You're going to see we've got what, 84. Nope, next line down. 80% implied volatility priced into those options. So that means, yep, they're pricey, they're juicy right now. All right, let's open this back up. Oh, I guess it was on the correct line initially. It's 100% right now. I went down a little bit too low. In any case, let's go put this together. Again, knowing that we're going to have a conditional order. If the stock doesn't do it, we are not into the trade. If the stock does it, great. We're happy to go along with a potential rebound, and it might not last that long if we even do get a rebound. It could continue to drop, right? We'll all get to see tomorrow together. So we're going to make that a market order. And I have just been making these only good for the day. Reason being, if we don't get filled, we want to go back. We want to see, why didn't we get filled? And do we still want to be filled? And on this, we're going to do 3 contracts as well. Let's pull that up, drag our window up, and then we're going to say we don't want to get in unless the price of the stock gets to higher than or equal to. So let's change our arrow around. And we're going to go 396, which is $21-ish from where it closed right now. And let's get that number in there, 96. And let's just make sure our verbiage is going the right way. We want it to be greater than or equal to 396. And we're going to go ahead and hit save. And we're going to put this in our options bucket as well, option strategies. All right. Now, I do want to follow up on a couple of our trades from the past. And there were several that just made some great moves for us. We had a couple that we kind of had to wind down unprofitably, all right, because conditions changed. Now, here we did a bearish trade. This was 2 weeks ago when we got into this trade. We looked at it on this day. We got filled on this day. And really, bearish trade, but it ran up pretty quick. And then, of course, this major selling off action happened. Let's go look. It exited for us today. Let's go to MRL. And so we can see we initially got in a long put vertical. We paid $250 with the expectation we were looking for a max theoretical gain of $250. But we said, hey, if we get a chunk of it, if we get 70% or 75%, we're going to be happy campers. We're going to take it. And sure enough, it hit it pretty early this morning. Okay, so we said, hey, get us out at 425. What did it do? Got us out at 425. We're able to just lock that in and move. We didn't have to try to be there to try to catch it because we already had the exit order entered in here. The last one we're going to take a very quick look at is ADI. Now, ADI wasn't a trade over earnings, and so we did a short vertical and a short put vertical, okay? Theoretically, both of them can't be wrong at options expiration. We got in here on the green. We did it intentionally for earnings, trying to sell some premium. The very next day, this stock gapped up. So immediately we know, okay, likely the put vertical is likely to expire worthless. But the call vertical, I take that back. Yeah, the call vertical would not be in good shape. Okay, so it'd be like, oh, let's hurry and buy it back before it gets too expensive. And so what ended up happening is first thing, we were able to buy it back. And we were interested in buying it back for just to get out of the trade and go with our short vertical here. Let's see here. I think they're in opposite order. So the one we got out of here, really, I got to point to the right one, 27 cents was the credit. We were able to get out buying it back for 30 cents, which was only $3 per contract that we lost on that trade. Because we did it fairly early, the prices of the options were still pretty high, and there was a little bit of volatility going on in the market, which allowed us to get filled at a reasonable price, which is, of course, always nice. All right, so those are the ones we had time to follow up on today. Now, if you would like, go ahead and do the trades along with me, right? Practice. And then you might come across your own questions to say, hey, what would you maybe do in this situation? What are we looking at here with this particular trade? Okay, I think it makes your learning a lot better if you can do that. Again, they're just example trades. Now, I will remind you, if you will, go ahead and participate in our survey here today. Again, we really appreciate it as coaches if you do that for us. Cameron, thank you for helping out in the chat, and thank you to all of you for a fantastic session. All right, we'll follow up on these trades and more next week. We'll see you then. Bye-bye.